Very good evening to everybody watching. Thank you for joining us tonight on the evening review. My name is Taiwan Jabela. Tonight on the platform we are joined by Junian Gaweseb. He is a CEO and co-founder of FinFit Investments. It's a company that released a statement, a press release rather, last week, confirming that 79% of government employees favor continuation of the payroll deduction management system. That is a system where employees pay their service providers, financial service providers, not through payroll, rather than having to pay directly themselves from their take-home salary, if you like. Thank you, Junian, for making time. Yes. It's an important source of information going forward. Mm-hmm. If you can engage us on the sort of the motive and the background to the survey.
So foremost, as FinFit Investments, we are a financial wellness company. We specialize in financial wellness, whether it's employee financial wellness, organizational or community financial wellness. So that obviously, when the announcement came out, was a sort of a point of like what's going to happen to government employees, with some of the government employees also being clients through our various services, financial wellness services, such as coaching, debt counseling, and so on.
When you say when the announcement came, you're referring to government saying the arrangement, the contract that they have with Payroll. What is the company called?
Payroll Payments.
Payroll Payment Solutions.
Yes.
Is coming to an end of November.
Yes.
And everybody started wondering what is the way forward, essentially.
Yes. So our concern was more on the side of the employee, in terms of their financial capability to handle such a shock, in terms of taking over all the responsibility to manage the finances or the deductions that were otherwise managed through the payroll deduction management system. So that was sort of a concern, but more so also, if you look at the payroll deduction management system, about 80,000 government employees are on that system. So it affects about 80% of the government employee workforce. And I mean, for the most part, that system has helped them manage those deductions automatically. So that ending was for us sort of, okay, where is in the conversation, where is the employee's voice? And we believe that there should be a platform where employees can voice their experiences, their perceptions around this most important thing that sort of deals directly with their sort of budgets and so on. So our role here was not to sort of advocate for or against PDMS, but merely just sort of illuminate how policy change touches household well-being, debt management, and financial capability in a nutshell.
So as an entity that deals a lot with financial discipline and counseling people on how to budget and manage their resources. What has been the experience, either as a result of this exercise or even before that, in terms of employees getting paid all their money, the entire salary, then you go sort out yourself the payments that you owe to this company or that company, as opposed to having everything already done, and then what comes into your pocket at the end of the day is essentially your take-home salary?
Yes. So a very good question. So essentially what this system currently did, or the role that the system played from an employee's perspective, is in the form of a sort of a discipline mechanism or a behavioral anchor in terms of default to their loan obligations, insurance obligations, union obligations, and so on. So for many employees, it was an ease. Also based on the survey, they expressed greatly that the payroll deduction system was an ease to managing those deductions on a monthly basis, whereby whatever came through, they were sort of now left to sort of on their own manage in terms of take-home pay. So yes, the system served as a form of discipline to help them keep accountable to their obligations in terms of their loans, insurance premiums, and so on.
Absolutely. So just to look at your statement, the press release here.
Yeah.
It says the study was conducted by FinFit Investments and sponsored by Payroll Payment Solutions. 1,500 responses were gathered nationwide, of which 650 valid government employees' submissions were verified and analyzed. I want to venture briefly into some of the key findings. So 79% of those interviewed said they want to continue with this payment system, and then 72% said the payment deduction management system helps them to avoid taking on more debts than they can manage. Then you have a 65% essentially who rated PDMS, that is the payroll deduction system,
Yes,
as good or very good for them personally. And I'll just read one more. It's a number of them. 83% believe the end of this payroll system
Yes.
will make repayment and budgeting harder for them. Which speaks to essentially, but while we talk about that, let me just see, there's a document also where government's position seems to have been captured. Bear with me. It says here that, so there was this government payroll deduction management system reform submission by a technical committee. And on page 3 of this document, they highlighted a number of things that necessitated essentially the decision to discontinue the issue.
Yes.
But maybe before I go to that, so Payroll Payment Solutions.
Yes.
Were they contracted? Would you say they were contracted by government or by the service provider? Who sort of pay them for their service?
Very good question. I don't have the in-depth details of that sort of arrangement. However, how payment systems, or at least payroll deduction management systems, work is that the HR department or payroll department would contract a service provider to help manage employee deductions and affordability check and stuff. Obviously, with the idea of financial inclusion and sort of managing, how do I say, all these transactions in a way that is safe, transparent, and protects both the institution's integrity and also the employee's integrity. Now, with the payroll deduction system, many of the financial institutions sort of get what they call a deduction code. So they have to apply, so the financial institutions would apply to government, for example, for a deduction code, and that deduction code would then be approved, and once that is approved, they would then have access to the system to sort of load any loans and so on that employees might have with them. So even in their contracts, having the code in the contracts, in the loan contract, for example, it would state directly that the deduction for this loan would be deducted through that recipient's or that consumer's payroll through that specific code.
Okay. So now let me go to that document just quickly.
Okay.
So government says the challenges with this system at the moment, they say from an administrative perspective, the issue of the deduction code is not challenging as the available checklist is used as a guide. However, once a deduction code is issued by the Ministry of Finance, the only other role of the ministries on the ministry's end is the collection on behalf of the deduction code holders of the premiums directly from the staff members' salary. They went on to talk about this makes it extremely difficult to ensure that the total charges for the issuance of loans to government staff employees or staff members as outlined in the guidelines are being followed. They spoke about currently, despite the agreement or the agreed total cost of granting loans being indicated as not exceeding the prime rate plus 2% per annum, micro lenders are charging total cost in the range of 38 to 48% of the total loan, and these extra charges are incorporated into the cost of borrowing through indirect charges. The lack of monitoring and evaluation mechanisms may have exacerbated this aspect. One last line, it says, on the housing loans, despite the provided rate of prime, the licensed banking institutions are charging prime plus 1%. Essentially, of course, it's a very complex subject for me, but it sounds as if they are saying that there's no proper control of how much loans and whatnot employees of government can take on. They want a system where, I suppose, they approve and say, oh, this is within your affordability, or this is beyond it, and therefore we cannot approve. I don't understand it too well, but if you have any reaction to what they are saying here.
Sure. Okay, from my, should I say, not so significant knowledge about such technologies, there are capabilities within the technology for the, you have the recipient and then you have sort of the administrator, which is now government, payroll department. So the administrator has access to certain controls within the system. And I think like many systems, there are ERP systems and many systems that businesses uses, there should be a reporting mechanism. There should be like what they call business intelligence mechanism to report, okay, this is how much is going off from this specific employee or from this specific service provider and so on. So the detail in terms of every transaction should be available readily. The other one, in terms of the controls, I know that there is by law the 35% take-home pay cap that is put, that sort of stipulates that employees' deductions must not go beyond that 35% threshold, and or otherwise $1,200. Now that said, all those controls to maneuver should be in place with the system. So controlling the system, or at least having sufficient control in terms of determining what service providers should or should not do in terms of whether it's interest rate or so, the system should allow that to happen. Whether the system had it or not, that I don't know. But from my general knowledge in terms of payroll deduction management systems, they have sufficient control mechanisms for the administrator to apply. And I know through research, when this came up, like in South Africa, there was also such an issue. In many of the other countries, there were similar issues with regards to payroll deduction management. And through those cases, I could pick up in that, in many cases, the control is there. The control is at the administrator's side. And the administrator can even go to the extent to say that if you offer any of your products to our employees, you must offer it at this specific rate, or we won't accept. the administrator has that control. They could negotiate better terms for employees when it comes to through the payroll deduction management system. Whether that was applied or whether that was known or not known, I don't know. Whether that was specifically in that system, I don't have any knowledge of that. But I know from my general knowledge that there are those controls, that there should be those controls in place for government to have sort of that leeway to negotiate on behalf of employees for better terms and so on.
Wonderful. We go for a very short break and return with Mr. Gaweseb. We continue with Junian Gaweseb on the evening review. Now, what is being put on the table as an alternative to this issue? Is it that they need a different service provider, or that whole practice, people might just pay their own service providers themselves? What are you picking up from the conversations?
I think the strongest sort of message that I've heard from government side, and I think there were also some parliamentary sort of debate around the payroll deduction and the fact that a lot of employees, government employees, are over indebted. Now that is a real concern. It is actually true. And one would hope that the decision would have been made based on recent news reports of suicide and so on, especially amongst government employees, that there would be that concern to say that, oof, there's these issues here, we need to drastically do something. Now that said, the message that we have heard, or the message that at least I have that was sort of amplified, was that government wants to reform, wants some form of reform, and sort of wants employees to take responsibility, more responsibility in terms of managing their finances and so on. Not clear messages in terms of what specifically, how specifically those reforms would look like, but more that they've observed some technical or some challenges or some problems. Also not clear on that, what exactly the problems are, but that there is a need for some reform. So with that said, with the vagueness of at least a lack of clarity in terms of what the reforms are, how these reforms will come in place, makes it a bit concerning. And the biggest concern for us as FENFED is, are employees ready to go over, to transition from a point of the system managing some deductions on their behalf, and all of a sudden now they have to manage everything themselves. Is there adequate support in place to inform capability and sort of to inform proper empowerment to be able to handle that? And that also doesn't look very clear. But yeah, that I could only take that one message, that employees must become more responsible, and that government wants to reform, perhaps to help employees with their over-indebtedness and so on. But yeah, that is just my take on it.
No, absolutely. No, what I've heard, and this is what I don't understand. If government was saying, look, it cost us money, we are the ones paying this contract holder, which is Payroll in this case. But what I've picked up is that if you are a labor union, you are NAPU, and a government employee pay their membership fee. Payroll would then take 2% of that deduction, meaning instead of NAPU getting $100, they get whatever, 98 or whatever the 2% means. Meaning the payment obligation towards payroll doesn't lie with the state, with government. Government is not the one paying payroll, but the
service provider.
Deduction for whom,
yes.
The company for whom the deduction is made. So there isn't much liability in that sense on the part of government.
Yes.
And I know also that as an employed man myself, of course there are deductions that I handle myself, like my car or whatever.
Yeah.
But imagine if my pension was paid into my into my bank account, and I'm told I must pay Alexander Forbes myself.
Yes.
There'll be problems.
Yeah.
So I know what it means to have some of the things handled by someone else, by payroll, by the payroll office.
Yeah.
So I just really do not understand. But you're making also a good point to say, if end of November is the cutoff date, you ought to have a system where are employees even trained going forward to say you relied on this, you were dependent on this thing being done for you. Now you are going to stand on your own, and here is a training of some sort now to, and I don't know if any of these things are happening.
Earlier, when we started off, before this, we talked about behavior, financial behavior. Now, in the 2017 survey, national survey on financial capability done through the Financial Literacy Initiative, it was clear that many Namibians, the knowledge in terms of their, in terms of finances, I mean financial literacy knowledge, was quite high. But however, when it came to the financial behaviors, applying that knowledge was quite low. Now you can just imagine if someone was dependent on a behavioral anchor, something, and we are, all of us, the technology that we use, in many cases, the use case is to make it easier for me. So I become sort of dependent on the technology, just like a laptop. So otherwise, if somebody would have asked me write a whole report just by hand, after I'm so used to using a laptop, it would become a nightmare. Now it's the same with the payroll deduction system. So what you had employees use the system for the longest time, and they've become accustomed to the fact that there is this anchor that I can rely on to help me sort out my payments, especially those key loan, insurance, and so on. Now, all of a sudden, you are going to say, okay, no, sorry guys, you now have to totally take this on your own, and you have to manage it. I don't doubt that there are employees that are disciplined and that have good financial behaviors. But like the survey said, like majority of the employees feel that it was an ease. The system was an ease to helping them sort of manage this. And all of a sudden that ease is not there anymore. That sort of mechanism is not there to help them with this. That, for me, is something that should have been looked into in this decision, to say, okay, how do we help employees transition from a point where they are not so capable, where they are not so used to a point where they are now sort of capable in managing this thing themselves. And at least a few months should have been given for the transition, but not just giving a time frame, also giving the needed trainings, the needed coaching, the needed therapy, whatever the case might be, but the needed financial wellness intervention was supposed to be active and part of this. There is no financial inclusion that is how do you say, that can work without financial capability. If somebody says that yes, we have enabled financial inclusion through this payroll deduction, or employees have had access to all this, and there was a lack of financial capability, that ultimately would result in chaos. Because you just have people taking loan because they have access to it. And the fact that they will transition from payroll deduction to debit orders Now you have the banking fees, debit order fees. That is going to make it, and many of them mentioned it, that they actually fear that the fact that we are going to transition to debit orders, the loan repayments will become much costlier because the debit order fees are on them. Whereas you mentioned earlier, the fees of the payroll deduction is on the service provider. With moving to debit orders, the debit order fees are directly on the consumer. So the question is, how does moving from, PDMS to debit order make it easier for the employee? But also the PDMS system is not perfect. It definitely needs reform. The whole financial sector needs some form of reform to better protect the employee or the consumer, to better educate the consumer, to better enable capability for the consumer. And I think that has been left out. And that is sort of our position. The employee at the end of the day, the consumer at the end of the day is the one suffering. Although the financial sector might suffer and so on, and although there might be a big play out in terms of the ripple effects of this, we mostly focused on the employee.
Absolutely. Junian, thank you for coming through. We appreciate your input. We hope that there will be some sort of consensus going forward.
We hope that. There was actually some positive news, I think, on Friday, where there was mention of consultation that will continue throughout until February. So we hope to be part of that consultation. We're just waiting for invitation, or at least some form of indication where and when it will start taking place. We want to be part of that. We want to invite employees and the nation to be part of that discussion. Like I said in the beginning, we are not for or against PDMS. We're for the well-being, the financial well-being of employees, of the government employees, those 80,000 or 80% that use the payroll deduction management system.
Thank you, brother. Thank you for coming.
Thank you, man, for hosting me.
Sure. That is Junian Gaweseb. He's a CEO and also co-founder of FinCity.
FinFit Investments.
FinFit Investments.
Yes.
Thank you for watching.